Hey everybody, still here. Daily Market Pulse for Wednesday. It's March 12th, 2014. So stocks, of course, were lower. They were down. It was red, and then they reversed higher. The only index that finished down really was the Dow Jones, essentially. Everything else reversed back up, turned green. Dow Jones marginally lower. In terms of eight moving averages, the NASDAQ was below yesterday, now finished above today, and the Dow Jones was sitting on it yesterday and fell because of the slight decline, ended up closing just marginally below the eight moving average as well. So nothing much changed really. The moving average is essentially still holding for support. Distribution days are not great, as we all know, so there's definitely something brewing. What are they going to do with this whole thing? That's the big question. So let's take a look at the charts here. Okay, Dow Jones here, you can see the 20 had crossed over the 50. The 50 is still flat, 200 is still well below, but we came into that just a little above the 16,500 level. Just, kind of just barely hovering over the 1272 extension, and it's been kind of negotiating that back and forth with the 8 moving average as well. Now essentially negotiating, I think, the crossover on the 20-day moving average. So this only strengthens the trend, in my opinion, with that 20 crossing over. That's a golden cross. That's usually a good sign. So we'll see if that can actually solidify the trend, get this back through 16.5 and get it back to 16.7, where the 1618 extension actually currently resides as well. So a little dicey, but that nice reversal today. See that lower shadow, very nice. The volume was low today, unfortunately, so prefer to see that in higher volume. It's at least a decent sign that the bulls or the buyers are stepping in and they're trying to take this higher once again. Let's go to the S&P. S&P, like you can see, it looks just like the Dow Jones in a sense that let me move that right there. That it had that lower shadow, came down for a little bit, but eventually came right back to the 8 moving average and held. And in fact, I had that midpoint. You see that blue line horizontally. I had that midpoint of that green candle, thinking that might act as support, and it may in fact have done so. It could still flush back into 1850, but the 20-day moving average is rising. It had already given that cold golden cross at least a week ago. So again, long-term intermediate trends are up. With room to the upside in the 1900 to 1920 in particular, where the 1618 extension is. Let's look at the NASDAQ. NASDAQ came back, filled the window, came back to the bottom of the window, hit the 20-day moving average, and then bounced. So, came into 42.85 and reversed. Finished right at the 8 moving average, with room still to the upside. We talked about how it was kind of gliding and grinding up alongside that upper channel area. And what would they do with this? Bollinger Bands are a little tighter, so obviously there's a volatility has declined significantly recently. That's expected after you have a pretty aggressive rise, right? I mean, essentially you had this pretty steep, and then it finally just started to taper off. Then you had the drop, and then the up. So volatility picked up momentarily, and it's gone sideways and sort of tapered off. So now you have this window right here that it held, the 20-day moving average right there held, so now you still got room to the upside. And will they break this whole trend or not? That's the key here. If they can't hold this 52.85 level, then it's dropping to the 50-day moving average and possibly into 41.50 even for that matter as well. All right, TSX, of course, still gliding sideways, but it did dip. See that low today? It actually formed a lower shadow there, so it dipped for a little bit, sort of testing the prior lows that were established late February. So when you look at, let me just draw a straight gold horizontal line off some of these lows, like right there. You see, those are off some of those lows. I could go maybe a little bit higher even for some of the other ones and use maybe that right there. So that's very close to the low of today, including a 20-day moving average. There's some decent support there, but still consolidating sideways. Looking still for a break above these bearish engulfings to open up the Bollinger Band as well and start climbing to a higher level. Let's see how that goes. Let's look at the US dollar, Canadian dollar. Okay, so still kind of drifting, but still, you see the trends are still up. The 50 is still rising, the 8 still rising above the flatter 20, but still kind of a consolidation with the trends now sort of impacting it to try to push it through. Looking for a move into 112 and then maybe push it through 112 and a quarter, even to possibly higher levels. That's always possible. The euro will be next. Euro broke out, as you recall, consolidated for a few days, and broke out again higher into 139. So I'm expecting the euro to go higher at this point. It's definitely making new highs and new closes in particular right now. Treasuries 30-year Treasuries came off the lows, came off the 618 retracement as it did back in early February. Bounced several days ago, formed that Harami and then a bullish engulfing yesterday, and then a really pretty good move back into 132. So I said 132 would be a next target, 133 would be next, 134. Of course, in that order, can they accomplish it? The 50 had crossed over a declining 200. That only strengthened that current trend. Now, if price can actually move up a little bit, you'll actually have the 8 rising above a 20, probably start pulling the 20, and the 50, of course, is in close enough proximity that there might be enough momentum at that point and a strong enough trend to bring this back to 134. And then we see what happens up there, because we had a dark cloud cover, and then we had a bearish engulfing at those levels. We'll see if we get more additional sell signals, what kind of volume we have, and what kind of appearance now the moving averages will have up at those levels as well. The yen had a decent day as well, so bullish engulfing yesterday, and then a nice move again into the 8 moving average today, back to where the support level was at one time. So it's kind of back to a kind of a polarity area right now, back to test the resistance of rising 50, mind you, flat 8, flat almost rising 20 moving average as well. So it's trapped right now between the intermediate trend lines, but if it can get up and over the 20, we'll say, then it's got a shot back toward the recent highs and maybe the ultimate high near 99.50 on the yen. Gold. Now gold broke out, so we talked about the sideways action and how the 20 moving average rising was certainly going to help. The fact that the 50 was rising as well, and if you could get over the recent highs near 1280, you might start seeing a breakout. Well, it essentially timed it almost perfectly. The 200 is now starting to flatten. Beautiful breakout today above 1360. That original target that we had lowered that actually to 1350. I'm going to lower that to right there. We're still got a target now at this point of 1420 is next. Let me make that next here. Hold on. Boy, this is my steady hands, right? There we go. So 1420 is our next target. I'm going to take some of these other ones out below. Leave 1280 in there. And so there we go. So gold moving higher to 1420 next goal. So silver is the one that was lagging, and silver started to make a move today as well. So we want to take a closer look at that. So there's silver. We saw the quieting of the last couple of real bodies and candle formations, and said to watch this very carefully as this was approaching the 2050 line of where resistance was once before. So let's put that in right there. There's your 1250. Came very close. The 20 is still there. So now I'm looking for that bounce, that push. It's still in a kind of a flag formation, a little bit of a short-term trend right there. Now tonight, after hours, it might actually be breaking a little bit, but I'm still looking for higher levels back toward 22 and then eventually 23 on silver. So keep an eye on that one. Let's go to crude. Crude sinking even deeper into the 50-day moving average. The Bollinger Bands opened up as of today. You can remember, you see that as of yesterday, when you go right there, the Bollinger Bands were still tight. Now they're opening. And you got a little Harami forming right now after hours, a little bit of a push and bounce. You see the 98 to 97.50 level. There's a little bit of a zone of support that would be a form of resistance right across here that coincides decently well with the 50-day moving average as well. So I mentioned that blue shade area right above with 199 to 100 area, 150 area. I thought that would be the support zone or area, and it flushed right on through that to the next level. So that was your next target after that. Now let's see what they do. Do they flush further? After this much selling, my anticipation would have been that they bounce. Now that coupled with the 50-day moving average, coupled with the previous pivot area, the fact that it's oversold, including one final measurement, from high to low, you are right on the 50% retracement right now. So with that said, I'm expecting a bounce here, maybe back toward at least the century mark on crude. Let's go jump over to the small caps. So the IWM, representative of the Russell, came back to essentially fill part of the window that was there, that blue shaded area. That was also the polarity area that was established as well, including a very close proximity of the rising 20, which had already crossed over the 50-day moving average last week for a golden cross. So that only has strengthened at this point. A little bit of a flag-like formation, consolidation into support. They need to hold this, bounce back into 120 plus, and that would certainly resume the current trend that has been established thus far. Let's go right over to the VIX, because the VIX this morning had popped on the upside, looking to break the 15 mark, as I recall. We got into 1550 plus, almost 16, and then reversed, as you can see now with a dark cloud cover. Really not that well established, simply because the trend really is not truly up. So it essentially came into the window, that blue shaded area that I have there, and the Bollinger Band on the upper side, and immediately faded from there. So my anticipation would be that this continues to fade while the markets continue to rise to the upside.